Stop letting April, June, September, and January ambush your cash flow. I'm Jeff, CPA at MedTax. Today, I'll show self-employed doctors how to make estimated taxes run like your utilities on autopay. Predictable, on time, and no drama. Let's set the scene. If you earn 1099 income from locums, telemedicine, concierge, private practice, or moonlighting, you're both the employer and the employee. That means you cover income tax and self-employment tax. The IRS expects you to prepay during the year using Form 1040 ES, or by increasing withholding somewhere else. Do it right and you avoid penalties. Do it wrong and you fund the IRS's penalty pool. Here's the promise. By the end of this video, you'll know 1, when to pay in 2025, 2, how much to send without overpaying, and 3, a simple system to lock it all in. First, when to pay. For 2025, the 4 standard due dates are April 15th, June 16th, September 15th, and January 15th, 2026. If a date hits a weekend or a holiday, it slides to the next business day. Farmers and fishers have special timing, but most doctors use those 4 quarters. Second, how much to pay. Aim for a safe harbor so you're penalty proof even if income swings. 2 common paths. Pay at least 90% of your 2025 total tax, or 100% of your 2024 total tax, or 110% if your 2024 AGI was greater than $150,000 for joint filers. Many physicians choose the prior year method early, then true up later as income becomes clearer for the current year. Remember, total tax includes income tax plus self-employment tax. Third is the system, the utility/autopay approach. Estimate once using the 1040 ES worksheet or your bookkeeping plus last year's return. Split it into 4 equal payments unless your income is seasonal. Then use the annualized method on Form 2210 Schedule AI so Q1 isn't overloaded. Automate the payments via EFTPS or IRS direct pay. Treat each quarter like an auto draft bill. Bucket the cash. Move 30 to 40% of each 1099 deposit into a dedicated tax account so the quarterly transfers never hurt. Last is the quarterly tune-up. Revisit your numbers before each due date, especially if RVUs, call pay, or side gigs change. Here's a quick mini case study. Dr. Patel, a telemedicine contractor, expected $420,000 net income and set quarterlies using last year's tax as the safe harbor. Midsummer, she added a weekend hospitalist gig that bumped income. We annualized Q3 and Q4, increased the September and January payments, and stayed penalty-free without overpaying in April. The autopay plus tune-up model absorbed the change. Here's a few physician-specific tips. Retirement moves, cut quarterlies. Solo 401k or SEP IRA contributions reduce taxable income. Cash balance plans can move the needle too. Coordinate timing so your estimates reflect actual contributions. For S-Corp owners, payroll withholding from reasonable wages can replace part of your estimates. Withholding is treated as paid evenly across the year, so increasing it later can backfill earlier quarters. Estimates can't fix earlier periods. Make sure the salary is truly reasonable. For state taxes, you'll want to mirror this system for your state. Some states have different thresholds and dates. Add those to your autopay calendar as well. Avoid the April dump. Paying everything at year-end invites penalties. Quarterlies exist to match tax with income. Here's the recap. Your playbook, a safe harbor target. 4 dates, automation via EFTPS and direct pay, and a quick tune-up each quarter. Keep a separate tax account so cash is always ready. Use Form 1040 ES if income is steady, and switch to the annualized method if income spikes later in the year. Before we wrap, if you'd like a ready-to-use checklist with the 2025 dates and a mini calculator, download the quarterly tax playbook for doctors from the link below. Thanks for watching. If you're a busy physician who wants proactive tax planning, schedule a discovery call with MedTax today. I'm Jeff Green, and I'll see you on the next one.